Welcome along to another in our series of videos where we are going to be looking at bridging finance, and this is just a tool in the property investors toolbox, and we thought that a lot more property investors should probably know about it because the current market conditions are favouring very quick in and out transactions, and this is where bridging can come in. And joining me to discuss this is a renowned property developer with 40 years experience, John Howard. And John, you're such a great person to talk about this, but first of all, I think we've both got to once again stress that finance is the lifeblood of a property business. If you don't have access to it, if you don't understand how to optimize it, you are going to struggle.
Absolutely, Vanessa, and hello. Very, very important. Without the leverage, as we call it, you're not going to do many property deals or investments. So every deal really has to be leveraged, and it's how you leverage it, how you borrow the money, how much you borrow, who you borrow off makes all the difference.
Yeah, because most, I suppose, if we call standard landlords, are just familiar with, either buying properties for cash or using buy-to-let mortgage products. But of course, there's a vast array of different types of financial products out there, different deal structures. And as I said, it is a bit like a toolbox. And if you found a deal that you want to make work, what you're used to using may not be appropriate, and that's when you need to know about other possibilities that are out there that could help you, actually realise that deal. And bridging is one of them. And I think it's become a lot more into favour probably in the last 3 or 4 years. Previously, I think some people were quite in trepidation of using it because obviously the rates are a lot higher. It's a little bit scary if you can't exit. But do you agree with me, John, that bridging has gone a lot more mainstream in the last couple of years?
Yes, without question. When I started 40 years ago, you would never ever use a bridging company. The only reason you'll use a bridging company, and there are very few about, literally very, very few, was if you couldn't complete on a property, and it was almost considered as a desperate move. It's all changed. The market has all changed, and the only people around in those days you could borrow money for property off were mainly high street banks. Now the high street banks are pretty useless, let's be honest, and the bank manager has been replaced by the mortgage broker. There's some very, very good mortgage brokers. So the first thing you need to do, if you haven't done so, is get onto Property Tribes, ask people who they use as their mortgage broker. They're all very, very kind and happy to advise you who they use quite often and recommend. That's the first thing to do, because once you've got your broker, they will know all the bridging companies, all the rates and everything else, and they can find a bridging company that suits you, because they're all different. So, one will be much quicker than another. I know one that guarantees to have the money ready within eight working days, for instance, which is very impressive. But they charge a bit more. Others are less aren't so as competitive as that, and their rates are better. So it just depends, and they are a great source of finance. The one thing you've got to be careful is you need to know how long you're going to need them for. You need to have an exit strategy ready and prepared before you start borrowing off bridging companies.
Yes, and I think many inexperienced property developers have fallen foul of getting onto a bridging loan and then actually finding out that they don't have an exit strategy. And once the initial bridging period is over, then it reverts to an even higher rate. And quite frankly, the bridging company may not mind because they're making a lot of money from it. They've still got the security, so they don't have a particular sense of urgency to wrap it out. But I think the thing about bridging, John, is it's an answer when a property is unmortgageable. And it's also obviously very important, excuse me, for if you're going to buy and sell, because you can't really do that with traditional mortgages. So it's when you've got properties that maybe a short lease, uninhabitable, fire damage, loads of instances, or properties in auction where you have to turn it around quickly.
Yeah.
That's when you reach for a bridging loan.
Absolutely, without question. And it's really important, like I said, to know which one. One quick tip I would say is, if you think you need it for 9 months, the loan, take it out for a year. If you think you need it for a year, take a loan out for 18 months. Because when the loan expires and they give you an extension, which they will do quite often, they will charge you another fee for the extension period and probably higher interest rate. So anticipate the problem before it happens, and just get a longer period to start with. Don't forget, you once you pay it back, the interest stops. So it's not costing you any more to say, well, I want it for a year rather than 9 months.
Yes, very good point. John, can you remember what the shortest time you've held a bridging loan for, and what the longest time was, just out of interest?
Well, the shortest time is literally, I didn't need it at all, thank you very much. But of course, I'd already paid the damn fee. So there we go, because I bought and sold it straight away, literally straight away, same day. And the longest, I mean, I don't really do bridging, to be fair. I'm a little bit spoiled. But I would say that I've used 1 or 2 banks who are not bridgers, but getting that way. And certainly I've had to have them for, say, 14 months when I was hoping, or 16 months when I was hoping it was going to be a year. And like you said, they really don't mind that too much, as long as you've got enough equity. It's like all these things, Vanessa. If you're pushing yourself to the extent where, and I see this with my joint venture fund now, where people come to me and they are stretching themselves on some of these loans, and actually to the point where it breaks. It's like a piece of string or whatever, or you pull it, eventually it'll break. And that's what they're doing. Some people are just trying to stretch these the opportunities and the loans and the banks too much. So the banks decide they won't lend or whatever, because the deal isn't quite good enough. It's taking too long, or whatever it might be. So you need to make sure that, ask yourself almost a question: if you were a bridger, were you a bank, would you lend yourself money or not? It's not a bad question to ask. No,
absolutely. I think we are in a very turbulent and volatile market, and you mentioned in a previous video that actually there can be huge opportunity there for those that can actually kind of see the angles. And we know from past experience that some really successful businesses have been developed during a recession. I think I'm right in saying that Airbnb and WhatsApp were born out of the last recession, because people are looking for solutions, they're looking for angles. And part of, I think, what Property Tribes is trying to do with this series about bridging finance is to get people who are perhaps sitting there not really thinking they can do anything, doom scrolling on social media all day, thinking the world is coming to an end.
Yes.
Trying to inspire them and encourage them to get out there, look for deals, maybe use financial tools that they haven't used before, like bridging finance, and try and make things happen. Entrepreneurs, their mindset is to be busy in every circumstance, in every market condition. They don't kind of go off the boil. And John, you're such a good example of that, because you literally never stop, and you're so hungry for deals all the time, and you're always looking, and that's probably been a massive part of your success.
I think to an extent, yes. You have to be careful with it. You have to read the market. You can't bury your head in the sand. But I've made more money in a recession and coming out of recession than any other time in my property careers. So it's a great opportunity to everyone, but you do need to get organised first. Get your eggs, get everything lined up, not eggs so much in a basket, or you could argue that as well. Get everything lined up, get that mortgage broker, work out, get an offer in principle even from a bridger, and add it to the money you've got, and then go out and see what's available. Because if you can move quickly, going forward, speed, being able to get a deal done within a month, and that's why you need a good solicitor as well, by the way, get them lined up as well. then it makes it, you might get 40, 50,000 pounds off a property just because you can move quick on it. And if you're not organised, you can't do that. So it's madness. Get organised. Fail to plan to fail.
Actually, you've just raised such an important point, that being essentially a cash buyer, which is what you are with bridging finance,
yeah, absolutely,
move very, very quickly, and you can present yourself as a very enticing proposition to somebody that's looking to sell quickly. So you could actually use it to secure quite a significant discount. If you had to say your top 3 pros and your top 3 cons about bridging, what would they be in a nutshell?
Goodness. God, thank you very much for that question, Vanessa. Goodness me. Well, the first things I would say are that, it's speed. I've got a bank I use based in Mayfair. I won't say who they are, but they take 3 months to do anything. Which is fine if you're refinancing and you've got plenty of time on your hands. So the great thing about bridging companies is that, ask them, the one question you want to ask a bridging company really is, how quickly do you turn around an offer, a loan offer? And if most of these bridges can certainly do it in 3 weeks. Some specialize in doing it in just over a week sometimes. So that's the first question. Speed is the whole point of using a bridger. Is 1, they're more flexible, and 2, speed. So first of all, 1 is speed. That's the first thing. You want to know how quickly they do it, which is great. The second thing is you want to know what loan ratio they do and what properties they'll take on that a bank won't. So like we said earlier, do they take 5 damaged properties on, or do they take short leases on? Will they do commercial with some residential above, which banks are running away from at the moment? So all those types of properties have got options, have got opportunities, and that's where you will need the bridger. That's where you need the bridger. So they're the questions you need to ask them. If they're going to be, really difficult and to let borrow money off, then go and there's loads of them. Go and find a better one who's going to be quicker.
Yeah, and that's where, as you said earlier, that's where a great
absolutely
broker comes in.
Now going the other way, what are the
cons?
That's the benefits. What are the drawbacks? The drawbacks are if you don't need to use a bridger, and some people started using bridging companies like banks, normal banks, and that's crazy because they are expensive. So if you can buy the property through a more traditional bank, and the loan to ratio is loan to ratio is fine, then do that. Just because you can do it quicker. If you don't need to do it quicker, you're going to be paying a lot of money for it to be done quick. So if you don't need to do that, like my Mayfair bank, for instance, it take ages, but their interest rates are relatively very, very low for me, then that's fine. Because on that type of borrowing, I'm not in a hurry, that's fine. If I'm in a hurry, then I would try and hope that, I don't tend to use bridging companies, to be fair, but I'll be very happy to if I needed to, if it's a really good deal. And even if they're charging you a lot of interest, and that's the other thing, because they do vary in interest rates, so you need to check that as well, very much so. But of course, it could be the difference between making £200,000 or £100,000 or 50,000 and not. Then actually, if you're paying 10,000 in interest, who cares? If you're making good money. So if you don't need to use a bridging company, don't use them. Use traditional banking methods. But if you do, don't worry about it. You're doing it because it's an opportunity, but please don't use them as if they are a normal bank, because they're expensive. You need to be an entrepreneurial type person to want to bridge, to be honest with you. And if you're not that person and you borrow and you worry about borrowing money and so on, then bridging probably isn't for you. However, there are a number of products on the market now where it might start off as a bridge at auction. Say you're buying auction, you're going to refurbish and you're going to let it. And the same company may well do the bridge, and then they may convert the bridge into a loan once it's refurbished and let. So, it can be now a one-stop shop. You don't necessarily need to bridge and then refinance. That they might have a product within their business that allows you to stay with them, which is quite easy and quite nice, rather than have to start the process all over again. But all this comes down to, Vanessa, when you think about it, is the broker, the mortgage broker. They are the people that will advise you which bridging companies to use. And by the way, be careful of any penalties on paying back, and also if they charge you any for borrowing the money in the first place, because some people some charge 2% of the loan to take it out and 2% at the end as well. So just look at the small print and make sure you know exactly what you're getting into. Really important.
Very good point. And plug those figures into your Lendlord spreadsheet.
Absolutely.
Because
I'm using it regularly, and I'm normally very spoilt and get someone else does with that for me, but I'm actually doing it myself with that. It's great. It's a really good product.
I didn't know that, John. I was saying you as in everybody watching, because
really great product.
Because those fees, they're all going to bite into
very much so
profit margin, aren't they?
Yeah, very much so. Absolutely. Be careful, but use bridging definitely, but be careful.
Fantastic. Well, hopefully we've inspired the viewers to consider bridging finance where appropriate. Obviously, via the Lendlord Finance Hub as well, we've got loads of bridges on there, and we are actually working on some bespoke products that are going to be exclusive to Lendlord users as well. So that's a very exciting kind of advancement of what Lendlord is doing. But for now, John, as always, thank you very much for being so generous.
It's a pleasure, as always, Vanessa. Thank you.
With sharing your knowledge. I always love talking to you, and I always learn so much myself. And I think people are right to be wary of bridging, but by the same token, if it is the right thing to do, and they work with a broker to find the right product, then it could be the answer to make something happen.
Vanessa, it's horses for courses.